Welcome back to the 3-day challenge. We're gonna fill out our income and expense sheet here now and get that financial overview. This spreadsheet you can download from day 2. In the last video, you went through how to get an overview of your income and expenses with Lucas. Now today, or in this video, we're going to be working together to fill out your income sheet and your balance sheet. So you have it on paper, so you get that clear overview that you need in order to move forward. So we're going to do this together section by section. So we'll start by filling out our income, and I'll walk through this with you. Your expenses, which is usually a few more rows. We'll see what your financial surplus or shortfall is, and then we'll move over to the balance sheet with your assets and your liabilities. So we'll do this together step by step, so don't worry. I know it can feel like a lot, and I respect that it can feel like a lot. You know what, we'll do it step by step together. This is why we did the preparation work yesterday to get an overview of your expenses. And now today we're going to do this together. Once you've done this, I know it can be painful to do, but once you're done, you will feel a sense of calm because you'll know your financial situation. And yes, you might get some bad news. If we go back down to your monthly surplus or shortfall, that might be a negative number. And you know what? If that is, that's okay. All right, that's okay. Most people sadly have a negative number. That's why financial stress is so common and so pervasive. We need to know, right? Don't try to fool yourself. If you have a negative number, it's much better to know that you do than to be worried that you might have. Now you'll know, and you'll be able to go back to the day 1 video about cutting costs to change that. And the great thing is you'll have a perfect overview here of your costs so that you can quickly see this is where I can save money, this is where I can change my life. Because living with that financial stress is not worth it. Let's do this together. Let's change that future, all right? Because if you know where you're going, you get this overview, we'll be able to work together, and that's what tomorrow is all about. Today and yesterday we were looking at the past and present, and now tomorrow we're going to start looking at the future. So let's do this together, and then tomorrow we'll go for the future. Sound good? All right, great. So let's jump right in here. We'll start with your income, which is usually the easiest. We usually know how much we're making, right? So first, your salary. How much are you doing after tax? So how much actually lands in your bank account every month? Write that sum right here. You can, like I said, you can download and print this sheet off of your day 2 financial overview in the academy, all right? Then you'll see if you get any contributions, if you get from the government or from an ex partner or anywhere else, charity or so that is giving you any income or any money, I should say. Then if you have investments, if you have dividends, fill that out here. If you have properties that generate rental income, if you have other yields or other incomes, fill that out and get your total income, how much lands in your account at the end of every month. Fill that out there. All right, so I would recommend you pause this video now and fill out this part before starting me back up again, and we'll go into the second. So pause the video now and then come back. All right, cool. Let's get into your expenses. Let's do this together. So if you have investments, you can fill out the taxes. Either you did this pre-tax, then you fill out your investments. If you did it post-tax, after tax, then you can ignore this first row. It's for your convenience. Now, if you have a home mortgage, fill that out. If you're paying rent or rent on, everything you're paying rent on, your home, your car, or anything else, fill that out there. Any costs for education, that could be your student loans, it could be for your children, anything, educational expenses you fill out there. If you have a car loan, fill that out. Credit card, if you're making monthly payments on a credit card, fill that out. Other bank loans, if you have consumer loans or credits, then fill that out there. Your monthly utilities, your insurances, your fuel. Yes, you got to go through your bank account now and look at these one at a time and try to get a monthly overview and a monthly average. The good news is most internet banking will allow you to see all your expenses you've had for the last few months, so you can create this overview, okay? So if you did this a few days ago in day 1, that's great. Otherwise, you go into your bank account now and get this overview. Repairs. This one's interesting because usually you'll have a monthly or annual repair budget, especially if you live in a house, right? If you live in a house, things tend to break down and you got to fix them. So what is your monthly average your monthly average repair budget? How much do you spend on food? How much do you spend on pleasure or hobbies? How much do you spend on subscriptions? And then we added in 4 children here. So if you have more than 4 children, well, that's fine. You just put some of them together. If you have 8 children, like my friend Shimon, well, then you combine them, 2 kids per row. If you are like me, that has only 3 children, that means you got an extra row for expenses. So use these as you need to and fill out how much expenses do you have. The last one here is various expenses. That's if you're spending on clothes, etc. And then you got donations here. Now, donations is for me one of the most important things you can spend money on, giving away to help others. Now, as Tony Robbins always says, you can't help the poor by joining them. So if you can't afford, if you have a negative here, don't be giving away a bunch of money to charity. But as soon as you start generating a positive surplus, start giving some of that to charity. It will create a positive feeling for you. It will help other people, and it will give you even more of a reason to succeed. My son, we obviously talk a lot about finance in the home, maybe more than we should. But my son, all of a sudden, he broke out, and we were watching a movie. He said, "Pause, pause, pause. I got to say something." We paused the movie, and he said, "Look, it is really important that we make lots of money." We went, "Okay, all right. William, why do you say that?" He said, "Well, if we make a lot of money, we can help a lot of people." And that was just a beautiful thing, right? If we make a lot of money, we can help a lot of people. And that's because the way we've taught him money, he does chores at home and he gets money for it, a weekly allowance. But what he's learned is that a part of the money he makes always goes to charity. So that means the more money he makes, the more he can give away to charity. So that motivates him to make more money because he knows he's making a positive impact, which is really, really cool. So then once you've filled out all this, calculate your total amount of expenses, and then you'll see you have your total amount of income will be up here, and your total amount of expenses will be here. So you take your income minus your expenses, and that will tell you if you have a surplus or a shortfall every month. Once you've done this, you can go back to the day 1 video where Gisela talked about cutting costs so that you can see if there is anything you can cut to make this number improve. And by improve, I mean a bigger plus or go from minus to plus. That will give you a great calm in your financial overview. So this is the important part. Now, we're going to go over to your balance sheet. And this is a very fun part because this is going to prepare us for our work tomorrow. So for today, to get that financial, so easy said, day 1, day 2 is about the past and present, right? So yesterday we got your overview. What have your expenses been in the past? Now today, we've set what is your expenses, what is your financial income and expense statement today. And now you know this is your financial income or shortfall. Obviously, pause the video and fill that out if you want so that you're done with it before you move on. Then tomorrow, we're looking to the future. We're looking at how do we make your future amazing? How do we make sure you can retire earlier? We're getting into the financial freedom figure, which is going to be really exciting. And we're going to help you in how, when you've built up this positive surplus, what you should be putting that money into, how you can invest it in order to become financially free. So I'm going to show you tomorrow how you can learn more about investing. Sound good? All right, cool. That's going to be very, very exciting. We're going to give you some great resources that you can access to build your financial future. But now, to prepare that, we're going to go through your balance sheet now. That means your assets and your liabilities. So before you start this, make sure you pause and finish the income expense statement, all right? So you have the overview of your income statement. So pause the video and then start it up, and let's come back to the balance sheet here. So when we talk about assets or liabilities, we use the Rich Dad, Poor Dad definition, the Robert and Kim Kiyosaki definition, because it's, well, I consider it the best. So, and credit where credit is due, right? So the way they define it is an asset is something that generates you an income. That means you make money off of it. If it's something that's costing you money every month, that's a liability. All right, that makes sense? Okay, so if we do a quick little quiz here. A rental property. So if I buy a property and rent it out, would that be an asset or a liability? Well, it's going to cost you money to have the mortgage and stuff on it, but hopefully the rent is going to generate more income than the costs. So it's a positive income, meaning it's an asset. All right, very good. So how about your car? Is this an asset or a liability? Well, as with everything, it depends, right? But yes, the easy answer is it costs you money every month, so it's a liability. The other side of it is, of course, if you rent it out and you're actually making a profit, yes, then you've turned that liability into an asset. But for most people, your car is a liability. How about your home? How about your home? Unless you're renting out parts of it, it's probably a liability, right? It's costing you money. Now, a lot of people see your home as an investment. And we're going to talk about that in a moment, where it's an investment and where not. Because I'm not as tough on you as Robert and Kim Kiyosaki would be. Because they would say, no, it's purely a liability, not an asset at all. I'll say it's kind of a quasi-investment. But we'll get to that in a moment, okay? So first here, let's fill out our balance sheet together. First, you fill out your cash, your savings. So what money do you have? Then if you have any stocks, funds, bonds, if you own, we call this company shares. It's basically private companies. So if you own shares in a company that's not on the stock market, so it's harder to value, what would those be valued at? What could you sell them for? If you have rental properties, you get your full market value of those rental properties. And then we got other assets. That could be lots of different assets. But I'm going to take, for example, here, your house. You can see here we've written 75% of your house. Now, why have we said 75%? Well, because if you're going to buy a house, if you're going to buy a home, you need to put in a deposit, right? And usually that deposit will be right around 25%. Now, hopefully your house goes up in value over time. This is why people call it an asset, right? Because property grow in value over time. So a lot of people see this as an investment. You buy a house, it goes up in value. And what do? You then sell it and buy a bigger house, and it goes up in value. You sell it, you buy a bigger house, and you keep, growing just without having to put in more money because the value of your house is growing. That is really, really exciting. But why are you able to buy a bigger house? Well, because you keep taking that 25% deposit and rolling it into the next house, right? So you're never getting that 25%. You keep putting that in as the deposit. It's only when you're old enough that you start going from buying bigger and bigger and bigger to start buying smaller and smaller and smaller that you actually get to live off of some of that money. So until that point, that last 25% never sees your pocket. It just goes into the next property. So what we'll let you do is those 25%, that stays in the property. That is not an asset. That's nothing you're going to get access to. The other 75%, though, could be, because you could lend. You could increase your lending to pull money out. If you sell, you might use 25% for a deposit and keep the rest. So I'll let you, so again, Robert and Kim would not let you put any of this value here, and they would let you take your total home mortgage, which totally ruins your balance sheet. We're going to let you put 75% of your house value here because it gives you a more fair view of what kind of capital could you use to invest and build your financial future. Because that's where the key will be, and that's what I'm going to show you tomorrow, how you can invest and create a glorious financial future. All right? Sound good? Cool. All right, so let's get into your liabilities here. If you have any credit card debt or retail liabilities, home mortgage, and that's your entire home mortgage right there, car loan, other bank loans, that could be, other debt that you would have, credits, school loans, study loans, other liabilities, your total amount of liabilities. So you combine then your total assets, minus your liabilities, and it gives you your net worth. This would then tell you kind of how much money would you have available to invest if you paid off all your loans by selling. For most people, this will be a negative number. In that case, that's okay. All right, that's fine. And the first thing you can do when you start generating a monthly surplus is paying off some of these liabilities, at least the expensive ones, or you start acquiring the assets. Okay, and we're going to look at tomorrow how to acquire assets, but I would recommend paying off the more expensive liabilities. The cheap ones, like a home mortgage, don't really care too much. You can focus on building assets instead because it will give you a better return. Now, Once you know this, tomorrow we're going to go in deeper. We're going to go in deeper into this and how you can use this for your financial future. So I hope you're excited. Pause the video, or well, this is the end of the video. So sit down and make sure you fill out this whole thing. Your income, your expenses, get your monthly surplus or shortfall, your balance sheet, meaning your assets, your liabilities, and make sure you put yourself now in a position where you're going to have a monthly surplus. That's the most important part. If this is a negative, if you have a negative net worth, that's okay. The question is, do you have a monthly surplus of income that comes in every month? All right. Very good. I'm going to show you one little fun exercise before we stop, though. This is something my mentor did to me, and I'm not going to force you to do it. But basically, this was a proof to it. He showed me why investing is so much more powerful than working. Because essentially, you've been working for however long you've been working, right? And your net worth is really the result of that. That's how much money you've been able to accumulate from that work. And what he says is through this, you can calculate your true monthly salary. So say, for example, you have, let's say your net worth was $100,000 or euros or pounds or krona, whatever currency, 100,000. Now, how many hours have you worked in your life? Well, let's see, let's calculate this. Say you are 40 years old. So you started working at age 25. So you've worked for 50 years. You work probably about 45 weeks a year, taking out, all the holidays and stuff. So you've worked 675 weeks, about 40 hours a week. So you've worked about 27,000 hours. So you have 100,000 of net worth. You divide that by 27,000. That means your true income is, excuse me, your true income is 3.7 whatever currency per hour. Now, if you're making more or less, that's an interesting number. When I did this exercise, it turned out that my income was about 0.2 euros an hour. That was kind of crushing, okay? But that's why he showed me then, and that's what we're doing tomorrow. He showed me that by investing, you could have an incredible income per hour. And now, thanks to my investments, thanks to my property portfolio, because that's mainly what I am as a property investor, I now have an average career salary, true salary of thousands of euros per hour, because my income is growing, my assets are growing over time. So I'm going to show you that tomorrow. Go through this exercise. If you have any questions, feel free to reach out to us. Thank you so much for joining the challenge, and I'll see you again tomorrow.